Good morning, everyone. Thank you for joining me today as we reflect on the key developments in the U.S. stock market on Friday, April 25, 2025. As we wrap up another week of trading, it's important to recognize the forces that shaped investor sentiment, propelled gains, and tempered optimism. Our discussion will cover index performances, driving factors from trade policy to corporate earnings, sector leadership, economic indicators, and the outlook for the days ahead. Let's begin. With the headline figures from yesterday's session, the S&P 500 surged 2.0% to close at 5,484.77. The Dow Jones Industrial Average gained 1.2% to finish at 40,093.40. And the Nasdaq Composite jumped 2.7% to end at 17,166.4. These gains marked a continuation of the rally we've seen since midweek, lifting broad market benchmarks to their best levels in weeks and demonstrating renewed investor confidence. On a weekly basis, the rebound has been even more pronounced. S&P 500 futures were pointing to a 3.8% gain for the week, while Nasdaq futures tracked up 5.4% and Dow futures looked to chalk up a 2.4% rise. This represents the S&P's strongest three-day winning streak since early April and underscores the market's resilience following the turbulence sparked by the April 2nd tariff announcements. Two key themes underpinned this upswing: an easing of trade tensions and a string of upbeat corporate earnings reports. Signs that China was prepared to soften its tariff stance on U.S. imports provided a welcome boost, while heavyweight technology firms delivered results that exceeded expectations, restoring faith in growth narratives. Let us delve deeper into the trade developments. On Friday, reports indicated that Beijing granted exemptions for certain U.S. goods from its 125% tariffs, and solicited feedback from companies on critical products in need of relief. In parallel, the first round of U.S.-South Korea trade talks concluded with both sides signaling progress toward a package designed to lift new American tariffs before the July pause lapses. Together, these diplomatic overtures helped calm nerves about a full-blown trade war and supported equity markets around the globe. Turning to corporate earnings, Alphabet's first quarter report was a standout. The Google parent eased concerns about returns on its artificial intelligence investments, with ad revenue climbing 8.5% year-over-year and AI overviews now serving 1.5 billion users monthly. Shares of Alphabet jumped 5.6% in early trading, lifting other tech names in its wake. On the same theme, ServiceNow and Texas Instruments delivered strong quarterly results, further fueling the tech rally and reinforcing the market's appetite for innovation-driven growth. Technology dominated the sector landscape yet again. The S&P 500's Information Technology Index surged 3.5%, the largest gain of any sector on the day, as investors piled into software, semiconductor, and cloud computing names. The Magnificent Seven megacaps led the charge, with Meta platforms up 3.9% and Pinterest rising 4.9% in tandem with Alphabet's strong showing. However, it wasn't a universal advance.